years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Friday, December 5th. I actually just looked at the sound yesterday and it was really good. So the process that I have, I think it's good here. But I got a big show. We're going to go over Meta. We're going to go Apple Oven. We're going to go over Applied Digital, a bunch of single stocks for you. I will also go over high beta, high risk, high reward, because I did a Seeking Alpha Pro version yesterday, and I created a scanner for everybody who has Seeking Alpha. You can use this scanner, whether it's premium or pro. I created this one using it for you because we'll go over the market yesterday. Kind of went nuts. December's watch list, we'll go over that. Seeking Alpha has a new video hub with a 2-minute analysis. And I've been saying this all the time. You want to go and look at just stocks for 2 minutes. They show you exactly what screens to look at, where to go, how to evaluate a stock. It is great. Broadcom is on my watch list. You want to know how to invest in the World Cup, because that's coming to America in 2026. I've got that out for you. And then we'll look at a bunch of other stocks like Netflix, and then finally end off with a crypto thing. But the markets yesterday, they were up slightly. I mean, it was nothing great, but you want to know what was way up? Well, first off, not to brag, but I this week, I got 9 out of 10 on Seeking Alpha's quiz. If you're a Seeking Alpha subscriber, you get this quiz. It's kind of cool. It's Friday. Every day you kind of just click 10 questions. I got 9 out of 10. I'm in the top 12%. I think most of mine are like 7 is what I average get. So, but the other thing that's big is December's watch list. Yesterday was a crazy day in the market. This is the list of December watch list stocks just yesterday. And look at the 1-week performance, up 22% for one name, up 6%, and this one was up 9%, another one up 8%. It was a good day for these stocks. Now, I will tell you, do not subscribe to my paid newsletter just because you get FOMO and you want to see these stocks. That is not a reason to go and subscribe for this December watch list. It is right up there. If you go to dailystockpick.substack.com, it's right there. But don't get FOMO. There's nothing in this list that is amazing. And I've said it in the actual newsletter. December's a funky month. And it's a funky month because you've got tax loss harvesting. You've got people taking vacation. You've got a lot of things that are working against you. And sellers right now, they're not showing up. And so December's watch list is kind of like it's a good one, but take it with a grain of salt that I don't think this is, oh my God, you should buy these stocks 100%. So if you want to support me, go and get it. But if not, we're going to talk about Meta. Because Meta is one of those stocks, and I've put in this week's podcast as well, that earlier in November when it dipped, I bought it, I think 676, somewhere right after earnings. I learned my lesson. I waited for the dip. I got back into it in a big way, and it's just tipping back up. Now, if you bought when I bought, I'm up like 11% on this one. What's interesting to me is that you have this gap, and I'm going to remove this segment, but you have this gap here. And yesterday, the price went all the way up to this gap and then rejected. And so when you look at the daily, what's interesting about the daily is you can see that blue line crossing under that red line. That's what's called a death cross. So my blue line is the 50-day, and that's the 200-day. And you're getting what's called a death cross. That's usually not very good for a stock. So it tests the 50-day, rejected off, early morning pop, and it rejected the 200-day as well. Is this good news for the stock? Well, we know what happened last time that Zuckerberg said, we're going into a year of efficiency. That was when Jim Cramer cried on air about Meta. And Zuckerberg afterwards said, hey, we're going to a year of efficiency. It's not that the company doesn't make enough money. It's not that they're not growing. It's that they're spending too much money. And if they are cutting from the metaverse, which nobody visits, if they're cutting spending from the metaverse and going to put it into AI, that could be a very big deal. Now, Meta's AI, it's not a leading contender. It's open source. It's Llama. I think a lot of people who go to Facebook and Instagram may use Meta AI, but if you've ever used it to try and create pictures, try and do some analysis, it's just not very good. But what it is good at is for advertisers. And so when advertisers go onto the Meta platforms and they try and advertise, it's really good at target advertising. So is Meta a buy? Well, in the quant, it's a hold. Why? The valuation is extended. You can find all of that information on Analyze with AI. Wall Street says it's a strong buy with a 26% upside. The price target that they have is 838, but they're bringing their revisions down. You can see that's a C. So is it a buy? That's your decision. You have to find a strategy. I think that the MACD is down below the oscillator on the daily. Here, the RSI quickly came up above 50. On a weekly chart, this one is still slightly extended with the MACD down below there, but the RSI, I still think you probably could get down under $600 again. But am I willing to wait for that? No, I bought more. So that's, again, just a decision. I'm up 11%. Yesterday's candle, the pop above. And by the way, if you need a strategy, one of the strategies that actually is interesting that I looked at the other day for Meta is go, no go. And Mike and the actual creator, Alex, I think his name is Alex, yeah, the creator of Go No Go, they posted this little video on the they had a live, and I like it. I mean, again, if you get TrendSpider, you get the Go No Go. You don't get the premium version, but you do get a version of Go No Go. And I like the Go No Go strategy, where it just colors the candles for you, and it tells you go or no go. And then you have the oscillator down there. I think that's the paid version, is that oscillator. But I like the candles, and you can Google TrendSpider Go No Go. And if you want to know how to pick stocks, okay, Seeking Alpha, and this is part of why I love Seeking Alpha, market crushing AI momentum top robotic stocks. And I want to bring you down here because Steve basically goes through how he chooses the stocks, how I choose my robotic technology stocks. Our universe of AI robotic stocks comes directly from the 4 largest AI robotics. Again, he outlines for you in this article how he chose the stocks. He takes you through all the fundamentals. He takes you through everything that he knows about these stocks and why he chose the top stocks. So you can take those, you can go into your charting program. One of them is Tesla. Now, he chose Tesla as a top robotic stock. And I will tell you, I love Tesla. I own some Tesla, and I learned my lesson. I buy and hold now Tesla, but it's a small position. I hold it in XLY, which is 50%, I think 40% of XLY is Tesla and Amazon, 2 stocks that I hold and I love. So I hold a large portion of that. And I put my buys here. You know, my bottom is 300. It looks like this 414 or 400 may actually be the new support level. But if we look at a weekly on this one, is it stretched? It is. The MACD's up high. The RSI is at 63. It's in no man's land. You know, you'd have to go much higher. There has to be a catalyst higher for this. What's the catalyst higher? I don't know. You know, maybe Steve has something in this article about Tesla that makes me want to buy it. I haven't read the full article, but I love that he outlines exactly how to buy a stock and how he picks it. And I want to bring up another stock, Applied Digital. Remember how I said, you know, hey, Applied Digital, I wanted it on my watch list, but I didn't really know, you know, where to go on this one. It's a good stock. Well, let me go into a couple of first ones. The first one is AppLovin. AppLovin, November 20th. I said, AppLovin, you should buy this dip at 530. Well, it's at 683 right now. Why would you buy this dip? Well, for me, buying the dip at that 530, it was 548. The 4-hour algorithm got you back in. For me, I know that that 721 is a previous resistance. I also know that the 200-day is there. I also know that the 4-hour algorithm, which makes me 1,652% and wins 60% of the time, had a buy. So again, did you buy AppLovin down that price? Because I will tell you, Wall Street still has a 6% upside to that 728. So it's called buying the dip. And by the way, just a bonus, this also is part of the Alpha Picks portfolio. So again, it's got a triple whammy. It's got a good 4-hour algorithm. It's in the Alpha Picks. It dipped down to the 200-day. That's kind of an A+ setup for me. So yes, again, Alpha Picks, data-driven portfolio, 2 stocks per month. They tell you when to sell. And AppLovin, when you look at it, it's a hold in the quant, but I liked it. I bought more, and I am doing quite well on this one. Over, let's see, over the last month, it's up 8%. Over 6 months, 64%. Year to date, it's up 111%. Again, I don't argue with Alpha Picks. I just do what I need to when I need to do it. So I want to bring up Applied Digital because that one's an interesting one as well. Applied Digital, it's a strong buy in the quant. Okay, it's at all-time highs. And it's at, well, not all-time highs. I think the high is 40. Yeah, and it's trading at 31. Wall Street says that this one is worth $43. $43. Interesting. And it's a strong buy in the quant. Now, it just went to a strong buy at $28. So you're up 10% since it went there. Again, is that a reason to buy? Well, I would put it into the 4-hour algorithm. And I would say, okay, I want to find an entry point to this one. I can see that $32 is an old-time resistance. Where's that old-time resistance? Back here from 2021 that I put in. And I can see right here in 2025, it pulled back there. Now, I'd like to see it get up over that price before I start getting close. Because right now, if I buy at 31 and I know that that 32 is a previous resistance point, then my likely risk reward is not very high. Because again, I'd rather buy it at this 200-day, which is about $21, which the 4-hour algorithm got you in here at 23. So again, find stocks that you like, find a system that you like, and it's out there. But again, Applied Digital, it's a great stock. If you look at it fundamentally, it's a good one. And yesterday we saw, by the way, space stocks. Yesterday's stock market was nuts. Yesterday's stock market, it was the high beta names, okay? And I'm just kind of thinking through how I want to go through this. Because the high beta names, I put it into this particular newsletter right down here. This is September 16th. If you scroll down here, I did a beta, just a kind of an overview on beta. And a fundamental score like beta is a good thing. And I just had a conversation with AI. And you can see on these stocks right here, these are all high beta names. Those are all high beta names. And so if you go and have a conversation with AI about what is beta, it's probably going to do yourself a lot of good. But again, I put it in that newsletter. If you want to read that newsletter, you can read that newsletter. I'll link to it. Plus, yesterday, the Russell 2000 actually outperformed, and TrendSpider is telling you, again, a lot of the Russell 2000 are high risk name, higher beta, and they're telling you, hey, this setup is really good for high beta for the small cap stocks. And so again, in summary, the beta score is a foundation for judging how bumpy the ride's going to be. It measures how much the stock actually trades away from the normal S&P. So yesterday's market, you saw OKLO up 14%. You saw Bloom Energy up. You saw Rigetti up. You saw USAR, which is the fine minerals, and you saw the actual the Russell outperform. So I went in, and I'm going to show you this real quick. I went in and this is part of the pro version, by the way, and it's part of the part of the pro version that I actually like, and you use AI, I said I would like to find stocks with a high beta and higher than average volume in 2025. Names like OKLO, Bloom Energy, and others to create a list. And it took me down and it brought up this list, okay? And so I can edit this screener, I can look at all the results, but I put it into a list and I actually added the quant rating to this, okay? So it's high beta names that are strong buys in the quant. And then I sorted them by the quant. And I am going to provide this to all the newsletter subscribers that have Seeking Alpha. So you can get this. You will literally click on the picture of this in the newsletter, okay? And that's how you import it and just save it. And then you can alter this, you can edit and add more things to it if you want. But again, that's how you import it. It's very simple. You don't need the pro version. If you want to do things like this, this is part of the premium where you just import it and you get a free 7-day trial. Or you can get the pro version. I'm sorry, the premium is the lower version. I suggest the sweet spot. Okay, the sweet spot for Seeking Alpha is the premium and alpha picks. I use pro sparingly, but if you're using it a lot, then I think that 20% Black Friday offer is great. But the price is $1,920 a year. And that's a lot. So for most people, I think getting out, and that, by the way, that doesn't include alpha picks. That includes the pro quant portfolio, which I'm not a super fan of. It does make sense and it does outperform, but it's an equal weighted portfolio. You can click on any of the links in Linktree if you want to search more for pro. But I do think that this particular portion fits 99% of the people out there that want to buy something that gives them an edge, saving time and an opportunity to find other opportunities. But again, I will provide this particular scan for you for free. So, and again, I go over, this is part of the pro version. This is Daniel Snyder, and he goes over a lot of the new things that they have in the pro version. So if you're interested in something like this, you can see this. They just updated a lot of the pro stuff specifically with that type of screener, so I can create a screener. So if you're a Seeking Alpha customer and you've signed up through me and you want a screener, ask me. I mean, I can probably build it for you. So, speaking of Seeking Alpha, here are the top-rated small-cap stocks. We just talked about the Russell 2000 actually outperforming. If that's going to take place, what are the stocks that will outperform? This is a great article. And again, a reason to actually have Seeking Alpha, because the possibility of finding a needle in the haystack, it takes you very little to do that. And what I love is when Seeking Alpha comes out with things like this. This is a 2-minute stock analysis. This is in their video hub. And they guide you through with great graphics about how to actually analyze a stock. And it's a 2-minute. Again, if you're spending hours looking at different websites for different pieces of information and you're having pop-ups, this is great. They've got Broadcom. They've got Dell. They've got Lululemon. They've got a bunch of them in here. And I watched this UNH. I may want to buy it again. I watched the Broadcom one. I absolutely want to buy this one. And I saw the Lulu one. The Lulu one was interesting. Not a huge fan. VSAT, which I brought up here before. T-Mobile. They have a bunch of these. And again, if you're a Seeking Alpha member, you can get to that. Just search for the video hub or go to the my newsletter and I'll have it in there. One of the ones that I mentioned, Broadcom, appears set to drive growth due to AI networking in Google chips from Susquehanna. They're raising their price target. This is a good stock, and I want to get back into this. It was up, let's see, almost 1% yesterday. It's at 381. What does Wall Street think that it's worth? They think it's worth 409. So is my risk worth the reward? Well, the risk is on the downside more for this one. And so I say that knowing that I own Broadcom in a bunch of ETFs, so I don't necessarily have to risk it here. In the 4-hour, the MACD is up above the oscillator. The RSI is coming off of oversold. It's at 56 in no man's land. You're trading sideways. You do have earnings coming up on December 11th. And we've seen the past couple of times on earnings, you've seen it skyrocket up. You know, the last time on earnings, we were trading around 359. You traded down to about 340. But again, you're sitting there with this, the previous, these lines probably mean nothing. Again, unless we have some type of pop in the AI bubble, those lines probably mean nothing. I want to get back into this stock. It's on my watch list. It's definitely one that I've got on my watch list and it's in there. But again, from a chip standpoint, I have Credo, I have AMD, and I have NVIDIA. That's what I personally own. Now, you asked me a lot. This is most of this stuff is priced in. So understand the World Cup is coming to 2026, but this is a great lesson in how I've invested over the years. So the World Cup is coming. And they lead you through the consumer products, the sports betting prediction, the travel and lodging, the broadcasters, and the ETFs in the mix. So they lead you through how to invest. You just have to pick which ones fit your risk reward. That's why I love Seeking Alpha. And again, I love that one. 4 top beaten down tech stocks. Again, Steve Kress leads you through how to find 4 tech stocks that are beaten down that are worthwhile. And he just guides you through it. So the opportunities are out there. You have to do your research. You have to find it. I will include, there's a couple in here that I wanted to point out, okay? One is HUT. I like this one. This is kind of similar to that whole Bitcoin. We're going to take our compute power and lease it out to some of the hyperscalers. That's what HUT pretty much is. And I like it. You know, you've got a pullback here, 34. It's a strong buy in the quant. We can go and look up HUT. It's a strong buy in the quant. And it's been a strong buy for a little while. Let's see. It went to a strong buy down here at 23. It's trading at 42 right now. By the way, that was just in August. That wasn't like forever ago where it was 23. That was August. Now, Wall Street says it's a strong buy. It's got 15 analysts. What's their price target? 56. So HUT, strong buy. Another one in here that I really like, my buddy and I brought this up before, VSAT. VSAT I've been bringing up for a while since it was in the 20s. We can look at this one. Over 6 months, this is up 295%. It's been a top strong buy candidate at like 4.9 something. And again, it's sitting there at 4.9. In this article, Steve Kress goes over why he likes VSAT. And we can see from a standpoint here, if you look at the 4-hour algorithm, it doesn't do very well. It's got a buy here at 35. Maybe it's starting to turn around. But again, those are stocks that I brought up. They were both up over 5% yesterday. By the way, even though Warren from yesterday's podcast, the Sidekick, where I went into Sidekick and he basically told me, hey, this is my portfolio deep dive, and he was very critical of it. He's telling me to sell HUD. I didn't like it. And I was like, I'm not going to sell HUD. I think he's got it wrong. And AI might be right and I may be wrong. HUD was up yesterday. I like the setup in HUD. I don't love it. It is expensive, but I like HUD and I like the aggressiveness of that culture. So I'm kind of keeping it. Just to kind of bring it up that, hey, you don't always listen to stuff. You do your own research. You make your own decisions. Amazon unleashes its most powerful and efficient CPU Graviton. They're touting their chips. The market doesn't buy it. This one was down 1% yesterday. Amazon is just one that's sitting there floundering. Now, it's a strong buy from Wall Street. It's a hold in the quant. Wall Street has their price target 28% above where it is. And you can see they are bringing their price target up while the stock is going down. I kind of like that because it tells me, hey, Amazon, I don't think they get credit for their retail business. I don't think that they get credit for basically trying to deliver to you in real time the things that you want. And I like that. Now, is it a great stock? It's not the best stock in the world. It's not like, oh my God, we're going to, absolutely kill it. If you look at the 6-month difference, revisions, analysts are bringing their revisions up. Momentum, it's been a B. Profitability, A+. Growth, A-. And the valuation's a D. And if you want to know why the valuation's a D, we can look up this Analyze with AI. And it says, a pure stretch, its price to sales ratio of 4 significantly higher than the sector median of 1. That suggests Amazon might be overpriced compared to its peers. Well, we can go and look, who are its peers? You can see Baba, Melly, C Limited, Coupang. I would argue Walmart is their peer. And when you look at Walmart, I think it's a little bit more expensive for what you get. So I have a much larger position in Amazon than I do Walmart. And I will tell you, Mike Mayo, who was the guy that I listened to as far as bank goes, I think he's Bank of America or Wells Fargo, I'm not sure, but he's a financial analyst, one of those guys who focuses on the financial sector. He was on CNBC yesterday, and I saw him. He picked Citigroup as the leader in this group in the financials. He said Citigroup is going to lead in 2025. He said that. I published it. I liked it. I didn't buy it. I've traded in and out of this one, but year to date, this one's up 53%. He picked it as his top financial stock again for 2026. He says they're undervalued. We've gone over this before. You can take a look at Citi. I liked his recommendation. I'm not necessarily buying it. I own Bank of America. I own Goldman Sachs. I own a couple of other financials. But, again, Citi, you can't argue. If you want to look at, we can look at Goldman Sachs. I bought Goldman Sachs on the dip, so we can look at like a 6 months. It's up 30 to 39%. It's up 46% year to date. Just kind of, choice. Choice is what you want. One thing that people say to me is, hey, you like Robinhood. Why don't you like SOFI? And SOFI diluted by 1.5 billion. They were down 7% yesterday. I will continue to say that SOFI at some point in time is a $30 stock. And why? Because we've gotten up there before. Now, these down at 11, boy, don't you wish you bought April of this year at $10 and it's at $25, almost $30? It's at 27 right now. It's down 7%. But again, SOFI, I think it's a $30 one. Go and do your research. Understand what you're buying. Wall Street's price target, their price target is $26.97. Where's it trading right now? $29.60. I think it's a good stock. I think the risk on this one is good, the reward, but and we talked about beta earlier. If you scroll down here and we just look at the beta, let's see, earnings estimates, profitability, capital, trading. Where is the beta? Ownership, risk. There we go. 24-month beta, 2.36. It's a high beta score. So you're going to deal with those fluctuations of stuff. Now let's talk about the big news of the day. It's that Netflix won the Warner Brothers Discovery stake. And Netflix is down 4%. Warner Brothers is up 4%. It's at 25. The rumor is that they paid about $26, $27. But there's a lot of questions about Paramount Global and their bid for it. The big thing about this particular deal is that Netflix agreed to pay a $5.8 billion breakup fee if the deal doesn't go through. I'm not sure if that's a breakup fee, if it gets regulator, like if the government says, hey, this can't go through. I don't know if that's a breakup fee, but $5.6 billion is a big amount. And you can see this one has been in a downward slide. Am I buying it yet? No. I'm going to buy the dip, but I will buy the dip when we have confirmation. You can see there hasn't been confirmation on this. I'm not seeing the 50-day move positive. I'm seeing everything move negative. So when I evaluate this stock, I say, okay, let's go look at the quant. The quant says it's a hold. Why? Valuation has gotten worse. Momentum has gotten worse, which is the number one thing in the market. And what I'm looking at is these factor grades, and you can see 6 months ago here. And revisions have gotten worse. So is Netflix an absolute 100% buy? It depends on your time frame. This, in my mind, is $150 stock. And where does they think it's 134, 30% upside. They haven't been bringing it down. Netflix knows something about Warner Brothers. They may know that, hey, the content's that valuable that we can continue to raise prices. I'm just worried about the breakup fee. I don't like that. If I were looking to buy something, I think it would actually be to buy WBD, because the reality is, I think you're getting about $27 per share. Paramount Global offered $30 per share. What if they offer $35 per share? What if they go in rich and they say, hey, not only will you have this, you can get this $30 a share, but we actually know that we can get this one through. Maybe an interesting one. Again, the risk reward on that one. If I were looking for a short-term trade, it'd probably be WBD. Long-term, I'm looking at Netflix, but I'm looking at buying Netflix at a lower price. And where might that lower price be? You might be shocked, but I would probably be looking at about this price right here, 103. And in pre-market, you're trading at 99. So if we start trending up and I see it break that, and we start looking at a positive 50-day, maybe you trade sideways and the 50-day comes down to the 103. Maybe. But again, you have to figure out your time frame. When I'm buying Netflix, I'm not buying for 1 month. I'm not buying for 3 months. I'm buying for probably 2 to 3 years. And so that would be my buy. If I'm looking for a 4 or 5 month thing, probably be WBD. Now, I wanted to play this one because this was such a good video, because crypto has been in just a crash. And this particular one, if this video found you, you survived another Bitcoin cycle. And it goes over, you have to know your time frame. And Bitcoin has been through 40% turndowns over multiple times. And what's the best strategy for that 40% turndown? It's been to wait until it starts back up, but you have to time it. And it's just not something that I can time. And so I watched that video and I was like, okay, a lot of people are probably like me. They bought maybe up here IBIT at $60 and you're sitting there at 49 and you're saying, well, should I buy now? Well, you're seeing the 50-day still moving negative. The 200-day still moving negative. We have some semblance of confirmation here, but am I buying it again? That's the question. Did I buy at 49? You bet I bought at 49. Did I buy at 60? You bet I bought at 60. Did I buy at 64? You bet I bought at 64. Why? Because I'm building my position and I'm buying in 100% of my position. Say you want 10% of your overall net worth. Your overall net worth is $1 million, and you want 10% of that. That's $100,000. Am I going in and buying $100,000 just because the 4-hour algorithm says buy here? No. I'm probably buying somewhere in the neighborhood of $5,000 or $10,000, and I'm building that position. And so that's what I do over time. And it's just a way, again, strategies matter. How to do this stuff matters. And I don't want to leverage myself to a one huge buy. Did I do that type of thing in April? You bet I didn't in April. Did I do it in November? No. We were only 5% down in April. We were like 40% down. I'm sorry, 5% down in November. We were like 40% down in April. So you have to understand these strategies. You have to understand your timeline. And that's what I try and do. So again, the Black Friday sales, they're almost over. And sorry if I've rambled during this one. Again, it's the setup. But pre-mint alpha picks, get it before it's over. Again, alpha picks, just God, App Lovin' would have paid for the entire subscription. That one alone, that's a great one. The most recent pick, by the way, not great, not doing great at all. But again, if you follow the process and you add 1% every of the portfolio, say you have $100,000 in alpha picks, that's $1,000. So even if the current alpha pick, you put in $1,000 back on the 15th, on the 1st, and now it's down 50%. It's not down 50%. But even if it were down 50%, understand that $100,000 portfolio, that particular position is only down $500. So it's your risk. And as a whole, the portfolio is up 274%. Now, if you bought VLO at the same time, you're up 81%. Again, risk, reward, what makes sense. And that's why I say the premium and alpha picks is the bundle that I like. So if you have any questions, I'll talk to you later. Have a great weekend. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.